We're looking overall at the Nasdaq and we're getting a massive drop towards the downside. Or are we? So we need to talk about a few things regarding this move on the Nasdaq and the next 2 days specifically, because this news is definitely going to form the way that the market moves and the indexes overall over the next 72 hours. Now, what we're going to do really quick is go back to here as well. So as stocks hold recent gains, CPI report ahead could set the tone of the Fed. Now, if you were here on the weekend, if you were here on Friday, we talked about this vaguely, but we have to talk about this more now because going into Wednesday, obviously CPI is going to be a big deal. So you have CPI coming in Wednesday morning. We've had beats across the board. You can see right here our expectations: 8.3 came in 8.6, 8.8 came in 9.1, 8.7. Are we going to beat? I don't know. We have to see exactly what's going to happen. Now, overall, I have to assume inflation has not been handled, and that's just my opinion overall. The only reason gas prices are going down is because of what the government is doing as far as their sweet oil reserves, and we haven't really discussed that too much here on the channel, but we do know what the government is doing, and we do know that instead of the Saudis lowering prices on the barrel, they're actually raising prices on the barrel. So we need to talk about a lot of stuff here specifically and the way the market's going to be moving. Now, before I go too heavy into anything and we look at this, I want to discuss specifically what happened this morning. So this morning, what happened? You came out and we had some pretty crazy price action. At around 8 a.m., you have a drop. 8:30 comes around right here, and you pop up. You go from 13.26 all the way to highs of locally 13.42, making a new local high. Yes, that's a new local high on the range. Now, I want to zoom out a little bit more, and as we come back, we can actually see this is our target, 13.5, 13.6. It's been on target for about 2 weeks now. Now, you are pushing up, but I want to discuss what's happening here. So you actually saw some sell-off happening here, and there was no specific news dropped or anything like that. It was just overall, you got to this key range, you started hitting a little bit of turbulence, and sellers finally started to step in here. Now, I want to talk about Bookmap, Cheddar Flow, what's happening on the dark pool, but we have to kind of just go over things that are happening here right now. So Nasdaq, you are pushing down here. Now, I anticipated going into today that either Monday or Tuesday would be your upside day, or maybe Monday through like the beginning of Tuesday. But I did expect Tuesday, about midway through Tuesday, going through Wednesday, to be slower. Why? Because CPI data. So going over the next 2 days, I recommend being pretty careful with your trading. Before we go any further, I have to ask you to consider doing 2 things: liking and subscribing. I'm posting videos every single day, so you know exactly what's happening with the market and key data points so you never miss out. Now, what I'm going to do is go over the past 3 CPI data reports. You can go further if you want, but I just want to do 3 just for time's sakes. So May 11th, June 10th, July 13th. That's what we're looking at. That's it. So what we got right here, we have June 13th or July 13th, and we're going to go for June 10th. Back here, which we all know about this one right here. So you actually had the 9th here, and then the 10th came out right here with your CPI report. So both of these days are really important. And then going into that last day, what was it? We're going to go May 11th. So we're going to go all the way back towards May 11th right here. So this is your May 11th day. So what do we see here? What's the going trend? As on our last few days, what has happened? On our last CPI days, you've gotten pretty big moves. So from this day here, you went from highs of locally 12.45 all the way down over the next 48 hours down to 11.7. But a 700-point move on Nasdaq. What about over here, the next move? So from your next move, you had locally, we'll actually do just from the opening of the 10th right here. You open up right here, and you come all the way down from 12.3 over the next 48 hours, 2 days. You make new lows at 11.09. Now, from the next day, this is our bullish one, right? So not necessarily that it was bullish, but you acted in a bullish sense. You ultimately move up from locally 12,000 almost flat over the next 48 hours, all the way up to 12.7. So actually, we can do the math here. The average here is about a 700-point move over the next 48 hours from a CPI data report on the last 3 reports. Yes, I mean, go do the math for yourself. I'm just telling you what the average is on the last 48 hours from the last 3 CPI reports. And guess what happens? Your new CPI report comes in right here. Now, what I want to do very quickly is I'm actually going to delete some of the work that we have here. I'm going to delete all the drawings, everything here. I want to make a very clean chart so we can see and so we can go over key focal points. Now, ultimately here on the range, I'm going to delete all of this right here. Ultimately on the range, what were we targeting? I'm going to come back right here. So what we were targeting was this right here. That was it. That was the target at the end. We want to see a test of that range, key resistance that we and support that we had previously. Now, I'm not going to say that we hit it to a T because we didn't. So theoretically, I am wrong. But we got very close to that level. So we're going to say it is what it is. But we did not get all the way to that level. Now, am I saying you're going to dump on Wednesday? I am not saying that because I just don't know what the CPI report's going to bring. However, if the CPI report comes out as another beat as far as inflation has continued to rise despite what the Fed continues to say, I have to anticipate you will get some nasty selling on the market. Now, again, I want to highlight the move that we've been making over the past few days and weeks. A lot of upside. We've been pushing for upside here for a while, okay? So when we look at this chart, I want to be very clear that we have had a really nice bounce during this bear market. You have. Now, are we out of this quote-unquote bear market yet? It's hard to say. It's very difficult to say. You're right there on the brink of breaking out of this overall trend that you have since basically December. You're very close, extremely, extremely close, but you kind of just won't hold out of it on the daily and 4-hour chart. So I want to highlight this very, very specifically. Now, the next key area I want to watch is how do you react to the lows you had back in overall March, right here? And then how do you react to the lows you had in April, right here? So you're going to have 12.8, and you're also going to have this level back at 13,000 roughly. Okay, so I just want to make sure this is very clear that you are still in a bearish trend on the market. We've been playing the upside, the bullish bounce, but now CPI is back, and we got to prepare for what's going to happen. So hopefully this gave you a good overall visual of what's been going on here. So what I want to do is come back to about the 5-minute and break down kind of some of this price action here. Now, over the past few days and weeks, you can go look back at what we were talking about, but ultimately we were talking about previous highs holding, and you're still holding previous highs. I want to highlight this. So this 13.1 area continues to hold, okay? It's still a very strong area. We're still bouncing. We are still holding above this key area. So in my opinion, you haven't pushed to a totally bearish instance. However, as long as you stay above these highs at 13.1, in my opinion, I can't trade downside. And I've been saying that. So I'm going to be very transparent with everyone here. On the day, I've literally taken no trades today. See, there's no trades here. Jay Ream, he took a trade on NVIDIA, got up like 15%, or actually 25% accordingly there on Microsoft, and then NVIDIA was up like 15%. But that was about it on the day. I didn't take anything. So you had opportunities, you had some scalping opportunities, but again, what was I saying here? What was the thesis here? Until you break below 13.1, this previous high, the downside, in my opinion, is minimal for day trades. Correct? That was my thesis. That was my statement. While you remained above this, you had a nice upside, almost 400 points of upside of potential making money on those calls. So that's the difference in what I was looking at here. So as we approach CPI, I have to talk about some of the possibilities and everything that I'm looking at here. Now, when I'm looking, if you start getting back below 13,000 and 13.1, you're looking really bad. You're looking like you're probably going to start just forming, possibly hitting new lows, okay? If CPI comes out, because the Fed has put themselves in such a situation. Now, what I also want to cover are things like junk bonds and things like that here in a second. But as we look at this, you have to recognize that this could be a massive problem. And on top of that, you still have the China stuff, which you covered on Saturday as well. So going back into this, I want to talk a little bit about Cpi and what's happening on Bookmap and Cheddar Flow as far as options coming into the chain. Now, as we look here, what I usually do is I don't necessarily look, and I do highlight the put to call ratio here. So as we look at Cpi, if we look here, you can see put to call 1.6. We've definitely seen this higher. We've seen a more bearish overall flow. But what I do here is I go to premium and I make sure and bring the highest premiums to the top. And when we look here, over $1 million or even $900,000, you have 3 bullish overall calls or options coming out here. But look at the volume flowing into put volume on Cpi. Look at it. Let's go to Qs. We're going to do the same thing. The script is flipping, people. When we look here, Qs above $1 million, we have 1. The rest, they're all puts, boys. So when you're looking here, you need to start looking at these key, for instances, VIX, put to call ratio. This is really interesting, in my opinion, actually, as you start to look at this, is you're definitely seeing a lot of puts coming in here, but I would have to assume that's a hedge. That's just my personal opinion. I'd have to assume that. But however, looking at this, you're still seeing a little bit of calls come in, but the puts are still pretty interesting here. So VIX is very interesting coming into this specific position, but I assume tomorrow, bet whatever you want. We come into this video tomorrow, I can almost guarantee the calls are going to be through the roof for VIX. Now, going into VIX and some of this fundamental viewpoints of how we can kind of look at what's happening is with the market. Looking at VIX. Now, we are in a clear downtrend on VIX. If we look at the 4-hour, I want to highlight here. There is a clear downtrend. Very much so. Basically since June. You are pushing down, you're pushing down, you're pushing down. It is what it is. However, the key range I'm watching is 16, possibly even 18. I need to move that up just a little bit, about right here. This is where I'm looking for you to come down to on VIX. However, you do not have to hit this level. I want to be very clear about that. You do not have to come down to this level because VIX is just overall getting slapped. And we know when VIX is going down, typically the market is going up. However, today you're still going down, have a little bit of love. But guess what? VIX continues to kind of drop. Now looking at J and K, something that's really provided us with an overall sense of the overall risk on the market and how to kind of play these types of things. You can see you open up pretty strong again, and this was our target on J and K. We haven't quite got there, but look, all day long, J and K drops. Going to DXY, looking at the dollar value, things happening here. You have an initial pop going into the 5th, coming down into today. Drop. So we are dropping. We're still kind of getting that pullback, which indicates that there's still a possibility of getting some upside pressure on the Nasdaq and SPY. However, I have to associate what's happening with CPI and the dangers here. And the cleanest thing to look at is going to be what I showed you with the overall Nasdaq and what's happening there on the specific days that we had CPI previously. You know, that should concern you the most. So I want to be very clear about where my targets are and things like that. Going into CPI, maximum upside in my opinion, so Wednesday, maximum upside into Wednesday is 13.5, 13.6-ish. 13.5 really is my key target. Downside, 13.1. If you get below 13.1, you flip to a bearish thesis. You flip towards some downside opportunity, in my opinion. While you hold this, like you have been basically since the beginning of August, since you flipped this level, you have to remain bullish. So we remain above this level, you are bullish. You get below this level, 13.1, you are bearish. So I want to make it very clear, okay? If you break below this level, right, I'm looking to short on the retest right there. That's where you're looking to get into that. That's what I'd be looking for. How are you going to react to those levels? How are you going to break below those key levels? Looking at ES and S&P. So it was very interesting today. I talked about this on, I believe, Friday and Saturday. You were making higher lows here. You continue. You even held it for a while throughout the day. You had a nice push to 417, almost 418. You continue to get those nice pushes, but then you started seeing sellers step in there once you hit that key range. Now, looking here, I have to associate, again, where you're at. If you can get above this level amount, the 418, 417 range, again, you know my target. My target, if you can get above 418, 417, the target is up here, 428 to 429. Okay? Now, we're back in our key range, though, which indicates, in my opinion, a lot of chop. This is that range we were talking about, right? We had the same range back here. So we were just trading up and down, up and down, up and down, up and down until you finally broke, but you just came right back down, right? So we're back in this key range. I want to highlight that. You're getting a little bit of push in the after hours. I don't know how this is going to go. We had some really bad earnings on the after hours, but you're kind of pushing back up on S&P. Really weird action. But definitely don't take and run with the after hours here, in my opinion, because you're going to have a lot of false moves going into CPI. So be very careful. So looking here, if you're in this range, again, I have to target 408, 409. So if you get below this range and you start trading back down here, I have to anticipate you will fall and retest that 408, 409, which again, if we bring back out, you can see what is that level? You can see it's the monthly level, which we continue to test over and over again, with the overall lows being 408. So 409, big level, 408 is your bottom level of support, which we continue to hold. So again, I do like what's happening here. I like the overall movement, but going into Wednesday, I have to tell you, be extremely, extremely careful. Now, I'm going to talk about some stocks that I'm liking and stocks that I'm looking at, but overall, I've been pretty happy here as well, and a lot of our plays are working out almost to a T. So if you've been here on the channel, we talked about Microsoft, we talked about Netflix. So first, talk about Microsoft. This morning, you popped up, got to like 286, started cutting some of those positions. I left some runners because we still have plenty of time with those, but you ultimately came back down. So very happy I started taking some of those runners. And that's what I encourage is if you're playing some of these trades, when you break out, don't wait till you get to your target. Okay, you can start cutting 10, 20, 30% gradually as you're going, so you're not stuck if something like this happens. So I really recommend looking at that as well. Netflix, we broke out of our key range. Finally, you're pushing all the way up to like 242. We had the $300 calls. We had some 250s, but mainly I was in the 300s. The longer term from J Ream, I wasn't in the scalping opportunities. The longer terms paid out well. Started cutting some of those as well. I'm still in a few here, just in case we start to run again. But looking back at NQ, I got to be very, very clear with you. As you hold this range, you still look bullish. If you get below 13.1, you are bearish. Again, people get confused here, but I want to be very clear here at these key levels and where you're performing and how you're moving right now. So be watching this specifically and how you're reacting to 13.1. After 13.1, 13,000 is going to be a key level, but really what I'm watching for are these previous highs and how you remain there and how you hold that level, because it was so hard for us to get above. Before I let you out of here, I'm going to go over Bookmap. And as we look at Bookmap, very clear here once again, you're still in a downtrend. You're pushing down almost all day. CVD, volume pushing you down. Sellers, we're just on the prowl today. We've been talking about the past few weeks and days. You don't need massive volume to move on the market. You do not need it. All you need is either more buyers or you need more sellers. It's as simple as that. If there's only 2 buyers on the market and there's 5 sellers, the 5 sellers typically are going to win. Doesn't matter if you have 100,000 contracts being sold or 5,000. No matter what, I'm telling you, as long as there's overweighting value on actual sellers, they will beat out the buyers. So you just saw no volume day, very slow volume, but you still push down. Keep that on your radar. So these are things I'm looking at. There were no icebergs, so there was no hedging or anything like that, which also leads me to believe, I'm looking at this, very stale movement. You're waiting for CPI. Before I let you out of here as well, I'm going to go over Tesla because people always want me to cover Tesla. And so as we're looking here, what happened here as well? Look at how you're playing out. We only have 3 levels marked, people. We have 3 levels marked. I haven't touched this chart. What happens when you come on Tesla? You break below this level here, right here, 902. You come down to 860, 870. Look at how this played out, people. It's the literal give and go, one of the easiest trades to look at in the market. You come down, you retest, you break back down. Where do you enter? Every single time on the retest. That's when you want to play it. What happened last time when you broke up to the upside? Let's just take a look. You shot up, you retested, came back to that level. It's as simple as that. You'll get your opportunities time and time again. Stop losses will be really tight as well. So make sure you're watching these key levels on Tesla. What I'm looking at right now, I don't really have another level marked to the downside. If you have to, 840, 820 in your next levels down here. But I have to assume you're not going to see a big move going into Tuesday. Wednesday is going to be your key day when I see all the movement. I know I didn't give you too much in this video, but again, I can only give you what I'm doing. So if I'm looking to trade heavily in the market, I'm going to give you lots of trades, lots of opportunities. But if I'm looking to sit on my hands, then I'm not going to be able to give you that many trades because I got to be transparent with you with exactly what I am doing.